So we have seen that there are different ways of securing long-term revenue. It's a big challenge. We see the markets are evolving. What gave you a revenue in the past, FCR, is maybe not the best solution only to be done in FCR anymore. We see that we going to longer term also, long duration energy storage. There's a lot of challenge. The market is changing all the time. So how do you secure your revenues in these markets? And we have you starting to talk about the Greek and the Italian markets, and maybe you can give us, Corentin, a bit an overview on how it's working there.
Thank you. Yeah, so Corey, partner at Clean Horizon, we do consulting on storage. Very simply, yeah, watch out. Thank you. So very simply, I think there's two main approaches in Europe for battery storage. I think there's the countries with merchant revenues, and some have capacity markets, and what we agree that we touch on is the countries that have decided to provide secured long-term revenue for a large chunk of the money that is required for batteries, because the capacity market generally typically pay between 10 to 40% of the required revenue stack, and I only know of 2 or 3 countries in Europe that will rely on big schemes, and that's the case of Maciej in Italy that was discussed just earlier, and that's also the case of the storage tender in Greece, where there's a contract for difference for batteries with 10 years secured revenues. And I think these 2 countries, probably with Spain, with the PER tender, where there's a capex subsidy, are the only ones relying on a public auction, well, an auction which is a subsidy to battery storage systems, enabling them to have fully secured long-term revenues. So especially Italy and Greece.
What do you mean long-term? How long is
long-term? So 15 years for Maciej, and I think Greece 10 years but the revenues, the issue with this mechanism is that they're very competitive, obviously, because it's low risk, so there's high competition, and therefore the results of these tenders is revenues that barely enable to pay back the assets. So everyone's betting on the value after the end of the contract. So after 10 years, how much will we be able to get once the revenues are not regulated? So of course, on Maciej, there's 20% upside you can get on the market, but the largest chunk of the revenue will be from the auction.
Okay, but it still allows you to play on the market to get revenues on top of the subsidies you have.
Yes, in some cases. So in Italy with Maciej, yes. In Greece, so it's based. It's a contract for difference, and it's based on the performance and the fleet of assets within a portfolio. So you need to do as well as the other assets that have the same discharge duration as you do, and you get a contract for difference based on that. So, and the revenue just out of magnitude, so Greek tender is around 50,000 euro per megawatt per year. So you see it's relatively low for assets that are 1, 2 hour, 3 hour discharge duration, probably need twice that. So everyone's betting for the revenues that come after this subsidy. And well, Maciej is still a bit ahead, but I'm convinced it will be very competitive, and we'll see very aggressive prices and a lot of projects being ready to capture these revenues.
Okay, Greece and Italy, there's money to make, but very competitive. So let's go to the next one. Daniel, you wanted to talk about Denmark? We heard it's a high-wind country, and also the Nordics, maybe.
Yeah, happy to. So Dan Koller from Dais Energy. Thanks for the intro. So yeah, maybe completely different to Italy and Greece, I suppose. Northern Europe and a very different outlook for Denmark and for some of the Nordics as well. So we quite like the idea that basically to get a degree of revenue certainty, you're not going to be able to rely on obviously ancillary services, right? This is a common theme. There's an ancillary boom. That was the case in Denmark and has been the case for maybe the last few years. There's been some 1-hour projects that have been built that have made a lot of value, but that's not enduring, and you're already seeing prices coming down. And it just comes back to the simple underlying merchant revenue drivers. So what is there that generates value in the day ahead and the intraday markets? And we see that in Denmark, and Denmark's a really interesting country because you basically have 2 different frequencies. So it's there are 2 frequencies. One is one part of Denmark, Jutland, is interconnected to Central Europe, and the other part, Copenhagen side, is to the Nordics, right? So you have one country that has 2 different frequencies, 2 different sets of ancillary services, and slightly different price drivers across it, which makes it quite interesting and a nice sort of stepping stone into those Nordic markets when everyone's talking about Germany. Actually, DK1, which is the Jutland area of Denmark, is very similar to Germany in lots of ways. Now, None of these markets really have long-term revenue security available through government auctions, right? They are reliant on your view or your funder's view or partner's view of merchant value. Now, we are seeing that there are floors and people offering floors, so traders being able to offer a degree of revenue certainty in the markets, but to date, we haven't seen that those have been at a level that is reflective of the risk that is being taken and is a reasonable risk reward for the amount of upside that you're giving up, right? So I'd say that these Nordic markets, they're really nice from a merchant perspective and they can create a lot of value, but there's some risk there about securing longer term revenues and having revenue certainty, so you need to kind of believe in that market to an extent and want to get into these markets to really see your projects get away and to see value in the projects.
Daniel, can I ask, if I outsource my battery in the Nordics to a trader or to someone who's taking it off me and guarantee me a revenue, you said this could guarantee my revenues, but your question if this could capture the value which I would get on the market. So how do you decide what you do?
Yeah, so I think it's a really good point, and it's a general one, is that the optimizers that can typically offer you the best floors, and I don't want to be overly contentious, but they are sometimes not necessarily the people that are the most agile to be able to offer you the best revenues, right? So there's a bit of a risk reward that you have to take there, and that is an ongoing point. And I think it's true for actually a lot of the markets that we're talking about. Some of the floors and revenue certainty you can get are from incumbents, and in new markets they just haven't had the opportunity to experience how to trade batteries in the most effective way, and that's fine, and then the markets will naturally progress and people will get better.
Okay, so not at all the same subsidies, completely different market. Helena, tell us about Portugal.
Good afternoon, everyone. I'm Helena Anderson from Ikigai. We work across UK and Europe, but I'm going to focus today on a little bit of Italy, just to follow on, and Portugal. And I think what's important in having a discussion about long-term revenues is also to think about the interaction with CapEx. So I look at it from the perspective of a developer and an investor in storage. And if you look at Italy contrasting with the Portuguese strategy driven by government, what you see there is that the focus on CapEx in Italy is driven by the need to be extremely competitive in an auction. The focus on CapEx in Portugal is quite different. So we've been working on a co-located existing renewable asset with a battery, quite small scale, in Portugal. And this came about the same time as they released a Portuguese grant program that was focused on providing CapEx grants. Because the Portuguese market, in contrast to the strategy that Italy has taken, wanted to try and stimulate the market, try and stimulate optimizers coming in, stimulate their own EPCs having an understanding of how to deliver co-located storage, and to manage the risk that many existing renewable asset owners were struggling with, which is curtailment and reduction in revenues as a consequence, deciding whether or not they should be repowering their assets, how on earth they were going to make the business case looking forward for those renewable assets. Batteries started to have a role. But they realized that unless they were giving CapEx grants, which would push investors to not only invest for the markets that existed now, but would also stimulate the development of larger scale batteries, longer duration batteries, then they wouldn't get the outcome that they were looking for in the Portuguese market. So that has worked to an extent. They announced their results at the end of last year. Interestingly, although we bid with one of our clients for a grant for the Portuguese market, we ultimately ended up withdrawing. And I think that's the most interesting part of the Portuguese situation. We withdrew because the handcuffs that government put on the grant were so extreme that it would mean that if we had miscalculated the way the market would develop over the next 5 to 6 years, and we had designed a battery and invested in a battery that wouldn't adapt to the actual revenues that came forward, when no one has a monopoly on what that truth will be, then our battery would have been fundamentally unbankable. So having offered grants, a lot of people then withdrew from the market and decided not to retain them because it was designed in such a way that it reduced flexibility.
Thank you very much. Baiju, the floor is all yours.
Perfect. Hello, everyone. My name is Baiju Devani. I'm Investment Director at Bluefield Partners. Just to give you a bit of context about Bluefield, Bluefield is an owner and operator of renewables assets and manages around 2 billion of assets, founded in 2009, across solar, wind, and now more recently, battery storage. And that's important because we're approaching the battery storage market from actually a very regulated perspective of solar and wind and where that's come from. And that's where some of our perspective kind of comes from. In terms of battery storage, we've been very active in the UK market, have a significant development pipeline of our own, and are currently building a co-located asset. We think co-location is a very interesting theme in the UK market. We're developing actively in the Italian market as well, but I won't talk about that too much, that's been covered. And we're looking at storage more from a pan-European perspective, and I'll provide some comments on Germany. One of the things that we like to do, and an area that we see opportunity, is partnering with local developers. You have a situation across a number of European jurisdictions where you get small development teams who are very good at kind of finding access to land, often have some good grid expertise or good local grid expertise, but then don't necessarily have all the capital to take projects to ready to build and beyond, and may lack some of the kind of commercial knowledge to be able to design a project, thinking through things like the revenue streams, the PPAs, the kind of IRRs, and having that kind of investor hat on. So that's kind of where we think we can add sort of value to that process. So coming on to kind of Germany, we around, I suppose, 6 months ago, having done a fair bit of work in the UK and Italy, we were sort of appraising European markets more generally and thinking, right, okay, where's next? What makes sense? And what we thought would be a good idea is just kind of look at the fundamentals, I guess. What drives return in battery storage markets? And in doing that, we kind of thought about a few things, and we thought, right, where is there? I mean, these things, by the way, are pretty straightforward and obvious, but I'll just talk it out. So, where is there significant renewables deployment, and where is there a significant shutdown of baseload and thermal power? And if you look at Germany, you have 150 gigawatts of renewables deployment, the biggest renewables market in Europe by far. You've got a government that, rightly or wrongly, has shut down nuclear capacity and is closing down thermal capacity, and so you have a structural deficit there relative to demand. What that then leads to, and what we've seen, is a very volatile, a significant arbitrage in the day-ahead power markets. And to give you a bit of context of that, in 2024, the average difference between peak and trough prices was around 111 megawatt hours. So there's a significant sort of arbitrage opportunity there in the day-ahead market, over 100 megawatt hours. And then that's the day-ahead market. And actually what's probably more interesting about Germany is it's got the deepest, and this has come up in earlier sessions, the deepest within-day market in Europe. So you have 5 times more volume trading in the within-day market in Germany than you do in GB, which is the second deepest within-day market. And that allows what's called kind of churning of a battery, which is this kind of quite sort of interesting financial trading concept where you can actually trade a battery without necessarily physically charging and discharging. But you need that sort of liquidity in the market to be able to do that. And so there are fundamentals there. And then to supplement that, you do have, you know, what we see in other European markets, an FCR and an AFFR, so ancillary service markets. But interestingly, I think a difference between, say, the German market and the UK market is whereas the UK market really relied on these ancillary markets at the outset, and they quickly saturated, the German market's coming from a deeper wholesale and within-day market, which is a bit of a point of distinction.
So also not a lot of subsidized, but a very good market where we can get to. Thank you very much. Maciej, the floor is all yours about Poland, please.
Hello, thank you. Maciej Szambelańczyk. I'm representing Polish Storage Association here. I'm also a lawyer advising on renewables and storage as well. When it comes to Polish market, I think we are at the verge of a boom, I suppose. I mean, we are definitely beyond PV bubble, and it seems that storage is this new black in Poland, and then everyone is pursuing to develop it, and numbers confirm that fact. I mean, a couple of years ago, we had like 12 installations. So most of this was a pump storage hydro, so no chemical storage. And when we look at the results of capacity auctions, we see that there are really gigawatts of installed capacity already contracted. And it is kind of ironic because capacity market in Poland was designed initially to support coal and gas power plants. And last year, storage squeezed out plant, gas power plants out of a support, and now the government has a little bit of problem how to stream this support back to plant storage power plants. But still, last year results in December 2024, 2.4 gigawatts of installed capacity in BESS contracted capacity contracts. So that shows where the market is heading. So good prospects here, however, with some hiccups because the capacity market will last for the next year only. So the last auctions are designed to be held in this year in 2025. And the question is what will be beyond. The capacity auctions guarantee a stable support for 15 up to 17 years, so this is stable. But the question is whether ancillary services and market arbitration will be sufficient if there will be more and more installations on the market. So
how much revenue you get from these auctions?
Okay, so just to show you the numbers, in 2022 the results were 80 pounds per megawatt, but it plummeted significantly. So in 2023 it was 48 pounds. And last year it was 52, but last year the government introduced some efficiency factor for BESS, which means that you need to multiply it by 58%. So effectively it's only 30 pounds per megawatt for BESS. Yeah, so the prices are definitely going down right now.
Okay, thank you very much. Now we will look about this market and around Europe or further than Europe. Please, Maciej, the floor is all yours.
Thank you. I'm Michael. I work for Envision. Hopefully by now you know from your brochures in your bag we produce cells, we produce DC containers and PCS as one integrated solution. So when we look at how to procure long-term energy storage in a place like UK, I thought, it's a very sophisticated revenue stack, but most of you know it very, very well. But I will get back to the UK and some of our thoughts. But I thought it's interesting to contrast with a much simpler mechanism, but in a market of similar size in the UK, and that is Chile. Right? In Chile, you have obviously a very sunny country, you have huge solar generation, and you can have levelized cost of electricity from PV somewhere around $25 to $30 per megawatt hour. That's extremely low, extremely competitive. So the way to secure your revenues is to hybridize with storage. So it can give you an uplift of up to 100% on your PPA. And these PPAs can then, often be sold to large industrial consumers, such as a mining company that secures part of their energy needs via such PPAs. And in that way, you have, securitization of your revenues over the 20-25 years, depending on the duration of your PPA. But with such a boom in a country that is shaped long and as an island in that sense, similar to the UK, you also start having challenges. So last year in Chile, there were hours of operation with 75% of the energy generated coming from solar and wind. And that creates a stability problem. It's similar to the UK, a bit behind. UK was even higher, right? So we have above 80% hours where the inertia is really low in the grid. And as we know from the UK, with the introduction of things such as Stability Pathfinder, grid forming becomes very important. And the similar thing will happen in Chile. The grid code is under revision, and we will expect it later this year to become fully clear how to perform grid forming, but largely we expect a very similar technical specification as we see in UK and Australia. They take some inspiration from countries a bit ahead. And then the big question is, well, how much will you get paid for it? That's the big question in the UK and the big question in Chile, right? We know at some point we'll likely have a market for things like virtual inertia in the UK, but how much will you get paid for it? And coming back to Helena's point earlier, so how does this influence your CapEx decision? So what we try to discuss with our customers in both markets is you want to do something similar that we all did for our TVs some time ago. We all bought HD-ready TVs. So there were no HD movies, but we all had HD-ready TVs. And in batteries, you want to have grid-forming ready technology when you look at and how to procure for the long term in those markets. To have the flexibility, once you know a bit with more certainty what revenues to expect, you can go either way and then invest or not invest that piece of the CapEx.
So what are my biggest revenue in Chile now? If I put a battery down, where do I get the most money out?
But really from the wholesale market. So you could sell in the wholesale market, but from a PPA you can get similar
industrial
levels.
PPAs then?
Yeah. or with the electricity distributors as well. They have some auctions with, more comments.
So now you know where to invest. You have questions about the different markets? Anyone in the room not being shy and wanting to add to the discussion? I was warned that the UK audience is very active.
Told you.
You told me. No one in the room. We have a full room. No one will bite you or film you. Okay, maybe if you change your mind, you can still put your hand up. There's a brave lady. If there's a microphone somewhere, otherwise I give you just mine.
Thank you very much. I'm wondering, we are discussing the market and the market dynamics, and the default assumption is that we're talking about batteries. Is something from what you're talking about specific to long-term duration projects? Thank you very much.
So, financing long-duration energy storage. How to get the money? Long-term revenues is one thing, but long-duration energy storage. Anyone who wants to take a reply to this?
Well, I can start and
Long time,
let
yes.
you continue then, but I think for all the schemes we discussed, none of them are technology specific. If you look at they go up to my mic's here. Maciej goes up to 8 hours for requirements for batteries. So the last derating I've seen was not that great for long duration, but the markets, the way I think the European approach is to let the market decide. And I think when we see subsidies, I think that's what Helena was pointing out. When you have subsidy and schemes, you kind of lock your battery storage asset within the system. So all the Maciej projects will have to do time shifting on the new market. So, and I think all these markets are designed to reflect the needs. And there's only the UK that I know that has specific schemes for new technologies, so long duration technologies beyond battery storage systems.
Because of what they're trying to replace, right?
Sorry?
Because of what the UK is trying to replace.
Yes, exactly. So I think it's the only one I know that has specific schemes saying we don't want battery, we want to foster also other technologies for the future. I think all the other schemes are technology agnostic, but for now, what's difficult to beat is the price of lithium ion. So that's why the markets are going to lithium ion.
So
Going to lithium ion. Yeah.
there's no clear stream for revenues for the moment for long duration storage. UK is starting with the first one. I'm coming out of the sky. And I don't know if there's someone else to the panel who wants to reply to long duration energy storage.
It was just a really quick comment that I think the answer's absolutely right. But the point is that you're going to need a subsidy, right? You're going to need some kind of scheme or some kind of incentive in order to do long duration. I'm not aware of anyone in this room that would advocate doing long duration on a merchant basis at the moment. And I'm assuming long duration, I'm talking kind of longer than 8 hour, right? I'm not aware of those conversations being had. Maybe they are, which is great, but I think it's going to be support scheme led in order to drive those kind of innovations into longer duration systems. Yeah.
So we need to find a scheme. And we have panels asking the next question, please.
Thanks very much. Easy question. So as a rule of thumb, what's the minimum amount of revenues or contract that needs to be secured in order to make a project bankable, in order to finance it?
So what is the minimum you need to get from funding for the Italian or Greek market in order to take the risk to go on the market? I suppose the risks you are able to take on different markets are different. So how much would you like to have, how much percentage of your revenues would you like covered by guaranteed revenue streams over 10, 15 years? 5%, 10%, 30%, 100%?
I can give a bit of a view. I think the question was what kind of revenue levels do you need, right, in order for a project to be viable? So we can maybe start with that, and then we can come on to fixed revenues. I think, and you could, ultimately every investor will be different, and this is a little bit IRR driven and what your return expectations are, but I think most people would kind of argue that a revenue level of between a kind of 100k a megawatt to 150k a megawatt gives you kind of that sort of viability. The question becomes about durability of that revenue stream. So if you look at, where the UK market was, you saw those sorts of revenues for a period, and then those revenues dropped off pretty quickly, which creates challenges. And so, this then comes into kind of the long-term perspective, right? So you don't need that sort of level of revenue 100% of the time, but if you can get, say, half of that or 30 or 40% of that on a long-term basis, that then gives you that kind of floor, which I think is obviously very relevant for debt investors. And then you can obviously get the residual top up through kind of a range of revenue streams. So.
If I can just add to that, I think the relative certainty of the revenues long term is such an important question because it drives the way in which you manage the battery asset, right? So if you have a lack of certainty in that market in terms of long-term stable cash flows, you're more likely to want to sweat the asset, amortize the asset as quickly as possible. That all plays into your CapEx strategy, your warranty strategy, how much flexibility you have with the battery because you've got visibility for, let's say, 10 years. You want to make the most amount of money that you can, and you do not want to be hemmed in during that period, either by your optimizer or by your battery design or any other factors in terms of the way the market is operating. If you've got a capacity market contract for 15 years, you make very different calibrations about that asset, I think.
And I think all I'd say on that as well is it's about what you have to give up to get it. Right, so if you want 50% of your contracted revenues, you're going to have to give up something, be that flexibility, be that having to design your battery in a certain way as related to a specific auction, or that just as value to an optimizer who wants to take an upside, right? So the amount of contracted revenue you need is a function of how much you have to give up in order to get it, of flexibility and of value, yeah.
Thank you very much. Is there still another question from the audience? We had already two very brave people, but I think that's most of that unexpected. I have some more questions for you guys. Baiju, I will start with you. And I wrote them down. What are the next steps in your battery storage strategy? You explained that you went to different markets and you explained different revenue streams. So how do you look at it? Where do you want to go?
I think there are two bits to this for us. I think for us, and this comes back a bit down to our DNA, we quite like building mixed technology portfolios. So we quite like the theme of solar and batteries in particular. We're not necessarily just focused on building standalone battery portfolios, and so where we can find co-location opportunities, we think that's very attractive for a number of reasons. The solar is generally seen as slightly lower risk from investors, and that allows you to take that additional risk with battery storage. So that's kind of co-location is a really interesting theme for us generally. And then the second bit, the bit that I mentioned earlier, is we very much like kind of markets where there's fertile development opportunities, working with developers on the ground who don't necessarily have all the capital or expertise, and where we can then partner with developers. So that's kind of a core component of our strategy.
Very good. Thank you very much. Corentin, I've got a question. We saw that there's basically no revenues guarantee beside 1 or 2 markets in Europe. So how do you cover all the costs? How do you develop a project in the markets then?
Yeah. Good question. I think it's all about how you stack the revenues. So we've discussed there's this basis which is nice to have to finance, can be a capacity market, and then you need to make sure you grasp the good opportunity in the market. So of course you'd be looking probably at ancillary services at the beginning, but also ensure that you have the capability when ancillary services are saturated to go to other markets. And you mentioned the intraday markets, which obviously are very interesting, where you can buy and sell electricity on very small products. We're talking about 15 minutes duration, and you can trade up to 5 minutes before real time. So that's a great spot for batteries to play in. You need to make sure you have also flexibility in your how you will be able in the future to manage your assets. So that's all about, we discussed degradation and how you ensure you can cycle the battery in the optimal way to grasp as much as revenues as possible without jeopardizing long-term revenues, such as the capacity markets, or that you have the capability of repowering your assets. It's also something you need to think of when you first draw your battery storage system and make a design, because repowering is not as easy in real life as it is on paper.
So long-term storage means looking at the market today, anticipating how it will evolve, and looking how your asset will evolve to fit this. Exactly. Okay, yeah. Thank you very much. And then I'll come to you. So we saw that you like co-location. We see that renewables projects have been built, and now the operators of those, or the developers, see the revenue plummeting. So it's getting lower and lower, the revenues from the renewables. So how can you come in and save them from the revenue point of view by putting batteries?
Superhero in batteries. Well, I think the first thing I would say when we work with clients who are renewable energy asset owners, operating asset owners, is that they often ask the wrong question. They ask the question, how much money am I going to make?
Okay, legitimate.
It sounds like the right question, and even though it's the wrong question, it's not their fault. They have been drunk on subsidies for a very long time. So they have got used to the world of long-term stable cash flows. And so they approach the battery discussion from that perspective, rather than saying, I'm struggling with negative pricing, I'm struggling with curtailment on my operating asset. I know many operators in Europe, especially in the Iberian market, that are making next to no profit right now. So the right question is, in fact, how much do I stand to lose by doing nothing? And if that is what you're up against, then you have the opportunity to look at your portfolio and say, what's my best possible storefront within a country, across multiple markets, for me to trial storage in a relatively low-risk way so that I can start to understand how to integrate that with my existing assets. And then I need to think about my strategy for how I'm going to use revenues within that market to limit my risk. So am I going to sweat that asset for the last 10 operating years of the renewable energy asset? Where it becomes very difficult is when you're at the end of a renewable energy asset life and you're coming up to the decision on repowering. In that case, if you have a lot of uncertainty around the revenue stream and you're being asked to make a decision not only to invest in a battery but to invest in a repowering of the whole renewable energy asset, then obviously you're making a different calculation. How can I get long-term stable revenues from that battery as well? But in a world where we're never going to see the same level of secure long-term cash flows as we've seen in the last 10 years, batteries have such a fundamental role in creating flexibility and creating what we call a renewable hedge. It's the hedge for your revenues on your renewable energy asset. It's not a standalone asset in that context. And if there's time, can I just answer one of the questions on here? Yes. One of the audience asked, with the rise in battery projects, their applications are expanding across various scenarios. Which commercial uses do you find most promising? We've actually been working with a motorway service station operator across the UK. They have 30 assets across the UK. And it's been a fascinating experience because on the same theme of what I was saying, what do you stand to lose? One of the reasons why batteries in the context of EV charging in motorway services is so interesting is because what they stand to lose, their opportunity cost, is the inability to service their customers in their new core market of revenue from EV charging. So when you look at batteries as a structural asset like that, how do I minimize my opportunity cost? It stops being about front-of-meter revenues and it starts being about time shifting and managing your customer base in the most effective way. So that's one of the applications I think is really valuable.
Thank you very much. And Daniel, please. This is fitting very much what I wanted to show you. Now, can you give me the question again? I don't know who's hit the question about the churn.
It was about churn, and I think
churn
that's
revenues.
Specific to we talk about it in the German market context. So the reason why intraday is interesting in Germany is because Germany doesn't have an incentive for system balancing. So in the UK, we have a system price. It can be positive, it can be negative. You can make money from it. It's not the case in Germany. It's just a cost. It's a downside. So everyone has to balance their system and their position in the intraday market. That's why it's so liquid. That's why it's so near term. Churn is just the idea of buying and selling on that market. The point is around, will value be eroded by financial traders? And the answer from my perspective is no, right? Because with a battery, if you're trading that battery and you're churning it, ultimately you have a get out, right? Which is that your battery can deliver. So you have optionality, you are asset-backed trading, and your battery, if you sell into the market and then the market shoots the wrong direction, you can still deliver the position that you've created with your battery. And so in effect, you are still asset backed. If you're a financial trader, then you can win and lose in that scenario and you don't have the same optionality. So you'll naturally manage your risk in a slightly different way. So churn value will remain in the German market. It's an interesting part of the revenue stack. I wouldn't say it's anything to get too carried away with. There's value there, and it feels nice because you don't have to do anything with your battery to get it. So that feels like it's good fun, and that it should be part of a business case. But and it can create value, but it's not the be-all and end-all. But yeah, the value will still be there for asset-backed trading. Yeah.
Thank you very much. And then I will go to Maciej. You're a technology supplier, we saw it. And what do you think from your point of view, if someone is developing an energy storage strategy or a procurement strategy on energy storage, what do they need to look at? What is important to check?
Yeah, obviously you need a very strong partner. But what is important, I think, what has been mentioned previously, you need to be a bit flexible to make sure your configuration is right for the scheme under discussion. So one of the topics is duration, right? You don't know in advance how exactly the de-rating factors will look in an auction-driven market, or where exactly the opportunities will be in a purely merchant arbitrage-driven market. So it's important that you engage with your supplier in detail from the very beginning. How can you be flexible in terms of duration? From the very beginning, in the early years, maybe you can switch from a 2 to a 4 hour configuration without touching, your grid connection. That's something I think provides a lot of option value as well. And the same thing as I mentioned previously in things like grid forming, where you don't know exactly if you want it or not. You basically want to be in a position where you can press a button and you have a software update, a bit simplified, and you are able to participate in those markets. And then, of course, last but not least, you also want somebody who can deliver on your ambitious growth strategy, which most of the people have in this room in terms of volumes, manufacturing, and so on. And the best players to deliver on both options are the ones who fully control their technology stack, both on the DC side, because they can really look in detail if this is possible to have such a duration update without changing too much on the other side, as well as on the AC side. So the fully integrated player is definitely a benefit to have as a long-term partner in your strategy.
Thank you very much. And the last question goes to you, Maciej. You're representing the Polish Energy Storage Association, who told us that the revenues in the auction are going down and down and down. What is the Polish Association doing to help us to get more business there in Poland?
One of the factors affecting revenue stream is also the predictability and stability of regulatory environment. And I think this is something that cannot be unprecedented. And industry association, Polish Industry Association right now gathers more than 100 members and has a very strong voice when talking to not only the government but by TSO, DSOs. So what the association can give to their members, but all stakeholders, is the ability to influence on how the market which will look like in Poland. And it looks promising, so I encourage to contact the association if you are interested in this market.
Thank you very much.
Thank you.
So I think we kept the time. We managed to squeeze 6 speakers in 40 minutes, and I found it very interesting what I learned today. Thank you for the audience for the questions. I really appreciated this. If you want to join the Polish Association, you know whom to go to. If you want to join the European Association, you know to whom to go to. And with this, a round of applause for the speakers. Thank you very much.